Hey, welcome investors to the 40 Finance channel. My name's Jeff Beers. Today we're going to carry on with the stock market crash series. I've got 5 new popular tech stocks that we're going to put under the microscope. We're going to use PE and EPS historical data to try to project a fair value that you might target as an investor to pick up these stocks if we do see a stock market crash. There's a lot of volatility in the market, and literally we're seeing tweets by the president drop stock prices 1.5% to 2%. So this is a real thing that can happen at any time. Doesn't mean that it will happen, but with election and COVID and all that stuff going on, it's just good to be prepared with some price targets in case you see a buying opportunity. Reminder as always that my stock picks and projections are just my opinion for your entertainment. Please talk to a professional before taking on the risks of the stock market. However, if you enjoy stock market analysis and going deep on stocks like this, then please subscribe to the 40 Finance channel. I post here 3 or 4 times a week, so make sure you sign up to get all the latest updates. And lastly, if you're interested in joining my email list, I got my free 15-minute stock analysis PDF guide. Link in the description for that one. Lots of great free tips and resources in there to help you research stocks better. All right, so what exactly are we looking at here? We are trying to predict where would stocks land in a crash. In my opinion, this would be more or less of a market event, right? An overall downturn in the market, more of a PE/demand crash versus the stocks or the companies actually performing poorly. There are, of course, plenty of companies that are struggling during this pandemic, but for these videos, I've been choosing more or less tech stocks and consumer stocks that have performed well. That doesn't mean they couldn't crash though, because if you have a full market correction, everything's going down with it. The price targets we do today, they're based on today's PE and a constant EPS. So the trailing 12 months EPS is more or less the fact set, if you will. And then we look at PEs historically and make adjustments there to see where these stocks might land. And just to summarize, the lesson here is simple, right? Like PEs are very high for popular stocks right now. Don't have to take my word for it. I'm sure you've heard that sentiment across the internet. And just understanding that they're high and where prices would be if the PEs or the market demand were to dip some can really help you plan out your investments and just become more efficient in the prices you buy stocks at. All right, so our first tech stock on the board is Nvidia. And again, what we're going to do here is pretty simple. We're going to look back at recent quarters to see what PE was Nvidia trading at, as recently as a year ago. Where does it trade at now? Times that against the EPS to give us an idea of how much PE or demand is based into today's stock price, and I think you'll find it's very surprising. All right, so you see Nvidia, if you look at the top left, price today at $549.46. This was before the open, and I think things are trending up since we had more tweets that backtracked on stimulus a little bit. So we'll see how today goes. You look off to the right, and the current trailing 12 months EPS for Nvidia is $544. Their PE today is 100.93. Check out the yellow box. This is where we get our historical data or our variable. Looking back over the last 6 or 7 quarters, you can see that Nvidia right now is trading well above the 60-ish range that it has even as recently as the start of this year. And in fact, if you go back even further, they were in the mid-20s and 30s. Now, I try to be fair when I pick a PE target, so I don't really think Nvidia is going to drop back down to a 30 PE anytime soon. However, I do think a PE target of 60, as you see off to the right, would be relatively fair, and that would bring you back into the world of, January and sort of pre-pandemic times. And if you follow the arrow there, you can see that a PE target of 60 times today's current EPS would drop Nvidia's price down to $326.40. Guys, that's minus $223 off of today's price prior to market open, and that's minus 40% overall. All right, so definitely a little nerve-wracking when you see a number like minus 40%. We do know that Nvidia's had a ton of great news come out as far as their product developments and the way they're looking at things in the future. So we're not talking about Nvidia crashing as a company. We're not talking about Nvidia no longer making money or technological advances, right? We're talking about demand into stocks falling. That's why Nvidia would go down. More than likely, Nvidia's EPS, like everybody else on the board today, is going to go up over time. But when your PE starts to get, plus 40 points over where it has historically been in the recent future, there is definitely risk there. And the risk is you're betting that the bull market continues, or you're buying for long term and understanding that there are going to be dips in the road along the way. So I just want to reinforce that point so nobody thinks that I'm saying Nvidia as a company is going to stop making chips and go bankrupt. That's not what we're talking about. All right, next stock on the board is Facebook. I omitted Facebook for Microsoft in my FANG stock crash series only because I was really interested to get Microsoft in there. So here's your Facebook if you've been waiting. Stock at the end of the day yesterday, $258.66, and we got an EPS of $8.18 and a PE today of 31.63. And that 31.63, if you look at the yellow box, that's really not that far off of where Facebook has traded over the past several quarters. If you follow Facebook stock a lot, you know there's always a lot of little political flare-ups here and there. People saying they're not going to advertise with them. You've got, antitrust stuff going on right now. But depending on how you feel about that, you could argue that all of those distractions have left Facebook in a relatively affordable position, very similar to kind of pre-pandemic levels that we saw last September and December. I chose a target PE of 28 just to try to get it at a great price, and that drops the stock to $229.04. That's only $29 off its current price and just over a 10% discount. So keep that on your board. If Facebook were to drop, let's just say they drop 30% in a market correction, there's definitely some opportunity there to come out way ahead of where it's trading today. All right, next up we've got Adobe, price of $47,898. Their current EPS off to the right is $7.94. P today of 60.32. Looking through the historical PEs in the yellow box, we see that Adobe's another one that's not really super duper inflated. I mean, I go back on this chart, we look back to 11/30/19, you got a 55.08 PE, and even last year at 229.20, which was pre-pandemic, you're at 57. You could argue that Adobe's not overly inflated. Off to the right, we got a target PE of 55. You multiply that by the current EPS of 794, and the price drops to 436.70, minus $42. And here's another one that's hovering right around the minus 10%. So again, let's say you get a 15% market correction across the board for most stocks. Then all of a sudden you have a great situation with Adobe to add onto your portfolio or potentially start a new position with prices like this. All right, let's take a look at Advanced Micro Devices, better known as AMD. Price is $84.48. EPS of 51 cents. PE today is at 164. Looking at the past several quarters in the yellow box, this one's sort of all over the place as chip stocks are, but we can see that it's definitely running higher than it has even as recently as June of 2020 and certainly back into spring and summer of 19. This one was a little bit harder for me to project like a fair value PE given the historic measurements. I chose 130. Frankly, it could probably be plus or minus 10 off that. But if you landed at 130 and with their EPS of only 51 cents, you can see that AMD could drop to $66.30 in that situation. That's minus $28 or minus 21% from today's price. All right, last stock and arguably the most interesting situation, we have Salesforce, ticker symbol CRM. Yesterday at close, it was at $250, current EPS of $2.59, and a PE today of 96.54. And the interesting thing about Salesforce, as you look at the historical trailing PEs, it's actually sitting right now at one of the lowest PEs we've seen over the past several quarters. So very intriguing. I highlighted in green the forward PE. That's what we're going to use for our correction price, which is actually using a number that's ahead in the calendar and is a little bit more positive from a momentum standpoint. So if you take a PE target of 70 times the EPS of 259, you get $181.30. Yes, that is minus $69 from today and minus 27% in general. But let's keep in mind that's on a forward PE standpoint. So frankly, any correction with Salesforce, minus 5, 10, 15%, you're actually in a good spot compared to what your friends would have paid for, just 6 months ago. All right, so looking back on those 5 stocks, we see that, hey, like the software stocks, Adobe and Salesforce, they're really not trading that high. Certainly if you compare them to Nvidia and some of the FANG stocks that I covered in the last video, you are seeing some opportunity there. If we were to have a correction, crash, dip, you name it, that was a market-wide scenario, gosh, if you went down 10, 15, 20%, you could definitely make the argument that Adobe, Facebook, and Salesforce all have opportunity for you to get in at prices that were cheaper than even just a year ago. All right, guys, I hope you enjoyed this look at some crash scenarios for these tech stocks. I'm probably going to do 1 or 2 more crash videos in this series, so let me know what stocks you're interested in the comments below. Don't forget to sign up for the email newsletter and get your free 15-minute stock analysis guide. And as always, please give me a like and subscribe if you enjoy this content. We'll see you on the next video.